Computer. All right, hi everybody. Welcome to the August on the bus sales training, coaching, and consulting lunch and learn. And I am excited about this one because it is all about found money, and who doesn't want to find money. Mm-hmm. And I'm just going to turn it over to April and Fred and let them wow us with what they know. I'll put it on speaker mode, and April, it is all yours.
Beautiful. I'm going to fiddle around with the share screen thing for a moment.
Yep.
See if I can make this work. All right. So, first, Fred Bachman is joining me here today. He helped me author what we're going through here. Actually, I should say he authored a lot of it, and I just kind of added some tweaks to make it good for today. Mm-hmm. Really, our objective today is don't leave money on the table, AKA tax credits business owners are or may be qualified for. And this is, of course, coming into line with everything we're doing over these last 18 months. Okay.
And I just want to interrupt for a quick second and say that I'm thrilled that you have Fred here. Fred is an old friend of mine who I miss greatly, and it is so nice to see you here, Fred. And I look.
It's great to get back together again, Chris, and to see that you're well. And,
you too.
And I do envy you being up there.
Thank you.
That's still a Catskills up there in Woodstock?
Yes, it is. Yes, it is.
You're not near Big Pink at all, are you? Or
say it again. I'm sorry.
When I hear of Woodstock, I think of Big Pink.
Yeah, very good. I've been by Big Pink often. Mm-hmm. All right, let's go back to April. I'm sorry, April. I just wanted to say a little.
Yeah, we can go on and on. We'll do that often.
Am I in the right? Should I change this to slideshow? Here we go.
Yeah, that'll do it. F5.
That's better, right? Okay. All right. So, Fred, tell us a little bit about yourself and answer kind of the questions that we talked about earlier.
Just for the recording, we'll go over, I know I'm amongst friends here, but I'm Fred Bachman, CPA. I have a accounting practice here in Florham Park, servicing all of New Jersey metro area with clients from coast to coast. My focus is on providing tax and accounting services to small businesses and small business owners. What I'm looking for is businesses that are somehow at a crossroads, either growing or, well, maybe not growing, acquiring or splitting up. Businesses that are at a point where, to repeat, at a crossroads, it may be time for them to take another look at the resources that they have for their tax and accounting needs. And I would love to present to them my background and experience and let them know what I can do for them. So I'm Fred Bachman, CPA.
And really what Fred loves about his job is that he likes being able to say that he's gotten people's lives back on track and enable them to care for their business, where, he is enabling them to do that because they don't have to worry about the CPA part. And 17 New York City marathons from somebody who's never completed one. That's pretty awesome.
I won't go into how long it took me, but
doesn't matter. You finished. Nobody likes a quitter. With that,
17 years to do one. No.
Is that a typo? It took you 17 years to finish one?
Yeah, well, we won't go into that.
So I'm a payroll specialist with Heartland Payment Systems. I've been helping businesses with providing solid payroll solutions since May of 2018. With that, I am a tenured payroll rep. As I am a commission-only employee, that's pretty significant, trying to build a network for my own business from scratch. I hail from Rockaway Township, but I have clients all around the tri-state area and beyond. I actually have clients in the Carolinas, New York State, and of course, all over New Jersey. And you know what I like best about my job is I like it when I'm explaining a product or a product feature or an opportunity, and finally I can actually physically see that light come on. It really excites me when I help somebody realize that there's a solution or maybe they can win something. And just something you haven't known about me, you may not know, I was a hostess on, or also called a Century Girl, on a fully restored 1951 observation rail car called the Hickory Creek. They go up and down the East Coast, and it was a lot of fun. My hidden talent is that I can carry 6 champagne glasses on a moving train and not spill them. with that, let's talk a little bit about where we've been. What's happened to us in these last 18 months is unprecedented in recent years. Political unrest among our leaders about how to solve these problems. Many grieving the loss of friends and loved ones who may have succumbed to COVID, and businesses unable to support owners' livelihoods where they had been able to in the past and or barely hanging on or closing. The statistics are real, but where we're going really is politicians being in agreement or not. As recently as July 21st, the New Jersey governor identified another $135 million in support funds to businesses, including specifically restaurants, daycare, and things to that effect. We're all getting vaccinated, so many of us are out buying food, clothing, even plumbing supplies. The point is revenue is being created for those businesses, and they are increasing their patronage as a result, with people more confident coming out. And with the increased patronage, they're going to be needing staff who will hopefully tentatively be coming off unemployment and stimulus payments in September. So with that, with money being on the table, what we'd like to talk about now is really what do they need? And what they need is a way to be able to find those supplemental income, get those tax credits that were either in effect prior to COVID, are more relevant because of COVID, or have been created as a result of COVID. So we're going to start here with one of the employer tax credit programs that we're talking about is called a tip credit, also known as a FICA tip credit. And basically, this is relevant to any food or beverage establishment where employees who receive tips from customers for providing, delivering, or serving food or beverages for consumption. Officially, the credit for employer Social Security and Medicare taxes paid on certain employee tips. Now, just to be clear, tipped employees, for instance, you tip your hairdresser or your barber. These are not applicable to these things. These are just those employees who take a lesser hourly rate, who receive taxes to achieve minimum wage. So the tip credits include the employee's tips included in the employee's wages that are subject to the FICA. Employers paying the matching share of that FICA just like they would regular wages. And the employer can get a tax credit against the income taxes for the employer's share of that FICA if qualified. Now, I'm going to talk about this a little bit. The tip credit is based on the hourly wage of the tipped employees. The federal minimum wage for a tipped employee is $2.13 an hour. New Jersey minimum wage for a tipped employee is $4.13 an hour. The tip credit doesn't kick in until the employee's hourly wage, including tips, for the month is $5.13 an hour or more. Now, we're getting into some nitty-gritty numbers, so I'm going to defer to Fred Bachman to help me out because I have enough to be dangerous. Fred's got the knowledge that you need.
Well, I hope I can live up to that explanation, but thank you, April. But just an example of how the tip credit works and maybe how it doesn't work. Here's an example. This is pretty much based on a monthly payroll. An employee works for 100 hours. Gets paid the New Jersey minimum wage. And so their wages for that pay period for the month is $413. They got $500 tips. The amount that the employer can include in credible tips, that's the IRS term, is just $400 an hour. Now, they had to put $500 into the employee's earnings record, and they had to pay on $500 their employer's share of Social Security taxes. They'll get back that Social Security tax amount based on the $400. And just how they'll do that we'll go on to another slide. But if we can get the next slide, example 2, let's say the employee tips were only $50. In this particular example, by paying the employee only $413 for that $100 hours, the credible tips, the basis for the tip credit in this extreme example is zero. So you don't get all of the money back that you had to pay in extra FICA taxes on an employee. It really depends on how much the employee's base salary is before their tips. For the most part, though, it's either all if you pay up to the 513 or most of the FICA that you're going to pay on employees' salaries, including, the employee's salary that includes the tips. You're going to get back in the tip credit. I'll turn this back to April, and we'll get you some information on just how you get that money back.
So thank you, Fred. Something I'd like to point out here, if somebody were to do the math right now on this and determine what the applicable wage is, the hourly wage for this employee, you'll recognize it probably doesn't equate to what the minimum wage overall in New Jersey is, correct?
Well, that's correct. There is a special minimum wage. This is both federal law and New Jersey law for tipped employees, which is lower, and from the employee's point of view, considerably lower than the minimum wage, aside from this exception for those employees that are tipped in food and beverage establishments.
Wouldn't the Department of Labor have an issue with if you were underpaying an employee beyond that $11 an hour, even including their tips? Or what is it now, $11.50?
Yeah. However, there is an exception for food and beverage establishments. There was some talk recently with all of this COVID legislation going on to eliminating that exception, but it is still in place both for federal and New Jersey law.
Okay, and the beauty is now, and one of the things that's important to understand, relative to your payroll company, this is not something, and I find myself, and we'll talk a little bit more detail in a moment, but I find myself kind of cringing a little bit when I'm in front of a single or multiple CPAs, and I go, CPAs don't want to be doing your payroll, and they certainly don't want to be worrying about your tax credits as far as the tipped employee tax credits are concerned. The beauty is your payroll company should be able to facilitate, dare I say, automate this from two perspectives. Number one, it's going to ensure that you know what the numbers are that your valid tip credits would be waged against, to be able to calculate that for you. So these documents would be easily transferable to your CPA, who would then really just plug in the numbers. But conversely, there's another part to this. If you underpay your tipped employees, that is a Department of Labor infraction that you could potentially be fined for if you are not paying them properly. So I kind of joke to people about, listen, if you've got an employee who's the best bartender ever and making $25 an hour overall, and these numbers could be significant as far as the tax credits that you could be getting back, and that's fantastic. But number one, Becky is perhaps the worst waitress you've ever had. And collectively, she's barely pulling in $7.65 an hour. That's a problem from two perspectives. Number one, obviously, Becky needs some training, and the automatic evaluation by your payroll system to say, hey, you're underpaying this employee, you're going to have to contribute to this income to make sure that they're getting what the minimum requirement is a way to help prevent your business from receiving a tax claim, a Department of Labor claim where you're underpaying employees. And that is automated in your payroll system.
April, if I can just amplify a bit of what you're saying, is I would like to make two, maybe a third point, but to start is that a lot of these credits that we're putting here, this one in particular is a credit that's already in place, but is really relevant for businesses that are starting up or improving. If you're a restaurant, you may have been doing your own payroll. Believe me, well, if you were my client, I would be telling you, don't do that. Make sure that those payroll taxes are being accounted for properly and they're being paid, because that's the kind of thing that's going to get you closed down.
Yep.
I have no problem doing this calculation, but the point of those slides is this is definitely not a do-it-yourself operation. And even from my perspective, I would advise my clients, turn this over to your payroll company. Make sure that they can provide you with this service and that you've signed up. And then once a year, you'll give me their report and we'll be hitting the ground running to get you your full tax credits for the FICA taxes you paid on your employees' tips.
Beautiful. And I'm going to let you take this slide too, Fred.
Sure. Just to get it a little bit into the weeds here, the tip credit does give you this 7.65% of those credible tips that we worked with. In essence, it's giving you a credit for the additional FICA taxes that you have to pay every quarter when you report your employees' tips. The tip credit is something that you'll claim once a year, and it is a credit against your income taxes, whether that's your corporate income taxes, or if you're a partnership, S Corp, or sole proprietor, it's a direct credit on your individual taxes that you'll report on your 1040.
Okay. And that's completed on the 8846.
That's right.
One other thing. So, and this is kind of the part I was saying in my slide, when the light comes on, and then we'll take any questions before we turn into the next tax credit. And that is, so this would be 7.65% using the slide that you used before, Fred, 7.65% on that $400, correct?
That's right.
Okay. So,
and that would be the $400 for one employee. And we would add that up for each and every one of the employees month by month, and for the quarterly period that is part of the quarterly federal payroll tax returns at Form 941.
Okay, so do the math. If you have 25 employees, this is 1 month. And let's pretend they're all doing this $400 and these qualifying credits. This is a lot of money that a business owner can definitely use. Now, does anybody have any questions?
I'm good. It's fascinating. Are you going to do more than just like the restaurant industry? There are other things coming?
Yep, absolutely.
Making sure.
Beautiful. New slide. Work opportunity tax credits. There's a lot of information in here, and obviously you can see all of them that apply. Basically, work opportunity tax credits are the government's thank you to the business owner who hires an employee based on one of these targeted groups. And that tax credit can range anywhere between $2,400 to $9,600 for a single employee who has been hired under one of these circumstances. And the beauty of this is there is no limit to the number of employees that can become eligible for this. And not only that, but this is going to be an applicable opportunity for any business. We'll talk a little bit about this as we go through them, but towards the end, we're going to come to any business that is especially hiring, let's call it, labor, unskilled labor, where, you know, you've got people in pick and pack in a warehousing situation. You've got people who are washing dishes and or, small fryer operator. You've got any of these situations where you're hiring somebody to do tasks that are maybe, simply minimum wage. Right now, because of some of the situations going on with COVID, this has actually been something that's been in place for quite some time. But the benefit of work opportunity tax credit, I believe, is never going to be more relevant to what we're dealing with right now. Fred, I'm going to leave this with you. Is that okay?
Sure. If you can just back up on one slide. I just wanted to show that there's many categories here. And one of the things I'm concerned when I present this to businesses is you may not realize that there are people out there that you're looking to hire that may fit one of these categories. April, you mentioned a few people, but I wouldn't leave out unemployed accountants might also fit into that.
Oh,
I wonder
absolutely.
if we could just flip through, we'll just try to highlight on this. We could probably spend an hour or more going through each category, but I'd like to flip through to the next slide and one after that, qualified veterans. Beautiful. This is an area where, one more, and where if you can read the who qualified veterans are. There may be, this is in fact an area where you can get paid for doing good. You can quickly see that qualified veterans are people who have been out of work or on food stamps, if I can use that, or for other service-connected disabilities. Let me see if, just to move along, if you can kind of move forward, April.
Yep, 1 second. See this is going to be a really relevant characteristic right here. And I'm going to go to the next slide, but then I'm going to say something real quick and then I'll let you continue. These are, if anybody has filled out a job application of recent, and of course there's going to be a wash of this right now. This is basically the check boxes about, are you a veteran? Do you have a disability? Have you worked in the last X amount of months? It's these characteristics in a job application that's going to help to qualify that employee within the various targeted groups.
Yeah, let's flip forward. I want to get to just doing the highlights is two more. Rehabilitation referral, summer youth employees. And if you can look at that, if you are in a empowerment zone, enterprise community or remote community, and this is an area for follow-up. If your business is located in those areas or looking to employ for people, this is a very generous tax credit that's also available to you. SNAP program recipients. And finally, if we can just go one more, and here's the one that's my favorite. Well, not so far. I want to get to the long-term unemployment recipient. And long-term in this case is 26 consecutive weeks. If they're into their 27th consecutive week and you hire them, this is someone, those wages that you pay that will qualify for the work opportunity tax credit. And it seems to me just about any business that's starting up again and looking to hire people may be taking job applications from folks who fit this particular category.
Absolutely.
The next slide, April, I don't know, this is something that I think is very important. It's that to qualify this credit, you've got to do what's called pre-screening in this notice. And I'm going to throw this back to April to talk about the services that Heartland can provide in terms of personnel support in this area.
Correct. A lot of businesses have a circumstance where, so you have a basic payroll product. However, a lot of businesses find themselves hiring, we're going to call it churn, where they're churning employees in and out for whatever reason. And again, we kind of going back to this, unskilled labor and a couple of different other reasons for that. But more importantly, the concept is that you're cycling folks in and out, and that is a mountain of paperwork when you're talking about things like W-4s and I-9s, and then translating all that information into the payroll system. And then, of course, accuracy, abounds when there are more than one hand involved, right? So within the payroll system, there's a product called electronic hiring or onboarding. And what that does is it automates electronically this entire process. And within that process, there is a pre-screening and certification that goes out for an employee automatically. So step one for that is if you have the Heartland product that includes onboarding and the work opportunity tax credit validation, you'll know very shortly after you hire that employee, which again is simply an import button once they filled out that documentation, to determine whether or not they qualify and what they qualify for. At that point, it is $299 that the employer can contribute to claiming those tax credits, again, to the tune of $2,400 to $9,600. Just to be clear, it's a significantly discounted rate from what other businesses might apply to that. I know a business owner who does these tax credits for a living, and she charges anywhere between $1,200 and $1,500 for the entire process. So, you know, this is definitely a better opportunity where $299 gets you a minimum of 24. That's a beautiful thing. And
this is one area where a business owner may be leaving money on the table, particularly as they start to gear up again in this, what we hope is the post-COVID world.
Absolutely. All right, we're getting into numbers here, Fred, so I'm going to let you take this one too.
Yeah, just very quickly, and again, this is a very generous tax credit. And for employees that are part of those targeted groups and have been part of the notification, you can see that you can get 25% of the first year wages if they've been working more than 120 hours, 40% of those first year wages if in the first year they worked more than 400 hours. In this one targeted group, the long-term family assistant recipients that come on board, their second year wages are also a part of the credit. This credit is also a credit against the income taxes, either corporate income taxes or for S Corp owners, partnership, partners in the partnership, or sole proprietors. This is a direct credit against your income taxes. Just to get into the accounting weeds, there is a IRS form, of course. These credit, along with other credits, are part of the general business credits, and they may be subject to certain limitations. We've been talking about businesses up to this point, but this particular tax credit is also available to nonprofits.
Oh, well, now I've been educated.
Yeah, let's not leave them out.
All right, so I'll be the acronym educator. You can be the claim form number and other details educator. God, that's why I need you. Now, we're pretty much done with the work opportunity tax credits. Does anybody have any questions regarding this? Okay, I don't need, yeah, I was gonna say, I don't need anybody to do the math. $2,400 to $9,600 is, you know, kind of speaks for itself. And pretty much,
I would just add that this is another area where this is not a do-it-yourself operation. You really, and the best way to get this done is to get a service that hooks right into your payroll and employee onboard.
That's a beautiful thing. And keep in mind, like I said, with September 6th coming around and the hope that, and this is where this is really relevant, there are obviously, well, how many different categories that we just went through as far as the targeted options are concerned. But one of the big ones right now is businesses are claiming, I can't find people to work. And those people who are going to be coming back to the workforce in September, I'm going to go on a ledge and say pretty much 90% of them are going to be eligible at least for the unemployed timeframe portion of this tax credit. Fred, would you agree, or am I being aggressive?
Well, I think so. And just because we're at this kind of, I hope, a unique juncture with COVID behind us and moving forward, businesses restarting, and folks re-entering the job market after an extended period of being forced to stay at home, childcare, but for whatever reasons are now re-entering the workforce.
Right. Originally, the definition was more around those moms who've been taking care of kids for a period of time and maybe are coming back full or part-time after X amount of years doing that. Now, almost the entire new workforce is really going to be eligible for that part of this credit. Okay. And now amongst my favorites, the employee retention credit. And this is kind of what I've been talking to folks about, because the truth is for a period of time when this first came out, it was kind of fluid. There was a lot of revamping going on. There was the original where if you received PPP loans, you couldn't qualify. Then it was if you got PPP loans, you could qualify. This is unfortunately, as recently as months later, people are still thinking if they got the PPP loan, one or both of them, they're not eligible. That's false. And it is going retroactive to March 27th of 2020. And this is actually enacted as a part of the CARE Act, which now allows the employers who received the PPP, of course, to receive those, to be eligible, or to potentially be eligible for the employee retention credits. The employee retention credit is refundable tax credit against certain employment taxes, and for equal to 50% of qualified wages an eligible employer pays to employees after March 12th of 2020. And if I remember correct, there was a cap on that to 5,000. Perhaps we'll go through that later.
Mm-hmm.
And then with January 2021, it's 70% of the qualified wages an eligible employer pays to employees after January 1st. And there's more to come because that's pretty fantastic. And this is for each employee wages, including certain health plan costs. Up to 10,000 can be counted to determine the amount of credit. So if you were paying healthcare costs, they may be part of those eligible credits. I'm going to let you go from here, Fred, because I'm starting to get up.
We could do maybe an hour or two on a lot of the details, but I want to just get to the most salient points here. One of the big questions is just who are the businesses that qualify? Who are what they call eligible employers in the IRS rules? And there's really just two categories. The first category is if you were shut down by a government order. In New Jersey, we know about Executive Order 103, which shut down brick and mortar businesses with certain exceptions. If you were shut down during that period, you automatically qualify for the employee retention credit. And we can move on and try to calculate just what the credit would be based, but you get a get out of jail card free at this point. If you didn't have to shut down, like accounting firms, so-called essential businesses, you can still qualify for the credit, but you've got to meet this criteria of a significant decline in gross receipts. And if we can get the next slide, yeah, here we go.
Yeah, I'm good, right?
Yeah, one more, please. So this is the point where I'm concerned that most audience members, their eyes will glass over, but let's get into the numbers, and you'd be surprised that you may, in fact, qualify. First complication is there's two sets of rules, one for 2020 and one for 2021. You can qualify in 2020 if your calendar quarter, let's say the second quarter in 2020, compared to the same quarter in 2019, second quarter, if those gross receipts in 2020 were less than 50% of the same corresponding quarter in the previous year, 2019.
Does that work? Hey, Fred, does that work 21 to 20 or 21 to 19?
Well, in 2021, it's a similar test in that you would take let's say, first quarter of 2021, compare it to the reference, which is the corresponding quarter in 2019. In our example, first quarter in 2019. But here, the decline to qualify you is only 20%. Or to just put it another way, if your gross receipts in the first quarter of 2021 compared to your gross receipts in 2019, 21 to 2019, was 80%, then you would qualify under this provision, the substantial decline in business.
Now, what are you qualifying for? What are they going to do?
This, you will qualify to see if you're going to qualify for the employee retention credit. So you've gotten over the first hurdle.
Which is qualifying.
Yeah.
This isn't that EDIL thing, right?
No, they are similar rules to see if you qualified for the loan or grants from the SBA, the Paycheck Protection Program, but this is going to be an actual reimbursement or payroll tax credit that you're going to qualify on your payroll, quarterly payroll tax return 941, or let's be honest, because of the retroactive aspects of this law, we're going to go back and amend your quarterly payroll tax returns on a 941X to calculate this credit that you'll get a refund for. It is a refund. A check will go from you from the IRS based on this employee retention credit that you will qualify either currently or retroactively.
And is there a minimum number of employees to qualify?
The honest answer is, for most of this presentation, there are two categories. We're going to be dealing with the so-called small employers. Those are people who had less than 100 employees for the year, and this is another calculation based on full-time equivalents, for the year 2020, or less than 500 employees for the year 2021. There is no minimum. You could have one employee that you paid payroll taxes on, and you can now go back and amend those payroll tax returns if you otherwise qualify for the employee retention credit.
Got it. Thank you.
Any employee count thresholds that might have been a part of this are less about the qualification and more about caps on the amount of money a business can receive back. Does that make sense? Okay, good. Okay, Fred, go ahead.
You can give us the next slide. I think we've covered this, the 80% in 2020, 50% in 2020. There are special rules for businesses that didn't exist in 2019. The critical figure that we're going through is so-called qualified wages. Certain things are included in qualified wages, like healthcare costs, the state unemployment taxes paid by the employer. There's also certain exclusions, such as relatives of the owners. Again, these inclusions and exclusions kind of go beyond the scope of this presentation, but you should be aware that it's not so simple as to get just what wages you paid. We've got to determine qualified wages. Another exception is any of those wages that were used were paid with PPP money, payroll protection money that was forgiven. Well, that's a long chain. Those don't count either. They're part of the exclusions. The fine point is the definitions of what goes in the qualified wages does change from 2020 to 2021. The point to take away from my perspective is this is why you really need to have a strong and flexible payroll reporting system behind you to make sure that we can get these numbers, calculate them easily, but also to have the documentation that we can back up these very generous credits that are available to employers.
Absolutely.
I think we covered some of these last two bullet points, that the mechanics of getting the credit, it's a credit that's available on your quarterly federal payroll tax returns. It is available retroactive, and you would get that credit by filing an amended federal payroll tax return, the Form 941X. And for accountants like myself, with a focus on small businesses, this is something that has kept us busy over the last few weeks. And just as a side, maybe as a plea for a bit of sympathy, these tax laws were actually changes in the tax law were put into place in January. However, the IRS did not issue its guidance on how to implement them to last month. And that is just kind of, we were off to the races at that point. And as a matter of fact, they're still issuing guidance. The later bit of IRS guidance was issued yesterday. Things that may have an impact on people who are filing current claims for the employee retention credit.
So I just wanted to clarify two things, just in case we skimmed over it. The first thing is we talked a lot about a business qualifying for the employee retention credits if they had certain gross receipts that they lost, whether it be 2020 over 19 or 21 over 20. Another way,
21 over 20 over 19. 19 is the reference period for both credits for 2020 and 21. A frequent a source of confusion or of questions from clients.
Sure. Thank you. Absolutely. But one of the things that we didn't talk about is that any business that was operating under a restriction is automatically entitled to these credits. And I'm going to give you an example of, well, how would that happen if they were operating under a restriction? How could they possibly not fall into a category where they lost money? I'm going to use restaurants as an example, but then I'll talk a little bit more. The restaurant, for instance, who had 10 tables in their restaurant now had to reduce to a 25% capacity over the last year, up into and including June, I believe. With that said, they got 30 tables in their parking lot outside. So they were still able to use the 3 tables inside, but now they have 30 tables outside, and they actually increased their receipts in many cases. There were some restaurants that were able to accomplish that. They are entitled, they qualify for these employee retention credits. Any business such as a hair salon, barbershop, gym, where else? Bowling alley, museum, those all fall into that category of businesses that automatically qualify. So now we get to the part where, what's the light coming on? Well, the light coming on is if I was actually talking to a client, wanting to talk to them about these numbers and get that aha moment, the first thing I do is say there's a $5,000 cap for the 2020 year. As far as those retention credits are concerned. So I'd actually start with just evaluating and or seeing what the value was in just doing the last quarter of the year. Because if the qualification is $5,000 per employee, given any period of time, let's do that last quarter first, because there are going to be costs involved with refiling to get those credits back. But let's talk a little bit about the first and second quarter of 2021. The threshold for 2021 is 7,000 at 70% of the first $10,000 in qualifying payroll that you would get back in the form of a tax credit per employee per quarter. So if we're falling into the characteristic of we know the business is qualified because they were operating under a restriction, I want you to do in your head for a moment, 70% of qualifying wages for the first quarter, first $10,000. Now, who hasn't paid their employee $10,000 in a quarter? Let's pretend for a moment my 15 employees, let's use 10 since I'm bad with numbers, my 10 employees were paid $10,000 in the first quarter, and those are all qualifying wages. That's $7,000 per employee, 10 employees, 70 grand just for the first quarter. Fred, are my numbers wrong?
I think the point is that if you, in fact, retained your employees, because this is the employee retention credit, you'll find that you can get reimbursement, you can get money back based on their 2020 wages that you pay, if you meet all of these hurdles, of 70%.
That's a lot of
Many
money.
just one point. Oh. Many employees, employers just can't believe this. It's too good to be true. Oh. It's not for everybody. There are certain conditions, but those people who qualify, they may only qualify for 1 quarter. If you kept your payroll up, you can get a substantial part of that refunded to you.
Now, this is something that your payroll company should be helping you with. The Fred Bachmans of the world are going to do their magic working with, someone like me with their client, and then going back to their payroll company to say, hey, we need you to refile these, and it needs to include these tax credits. And my understanding is you should get a check back within a very short period of time. If your payroll company isn't helping you with this, this is a challenge. And Heartland was one of the first to actually automate this in their payroll process on a quarterly basis so that you won't have to go back and refile. As of the second quarter, we were automating that for those businesses and just figuring it out for them based on what we know. And so if your payroll company isn't helping you with this, they're not doing you a service. You need to be thinking about a payroll company who's going to help. Any questions?
Again, my theme through all of this is that, don't try this at home. Definitely, this is something that you need to turn over to your professional. And the first step is you need to have your payroll with someone that can provide the reports, that can generate the numbers, that has those in place as part of the service they provide.
Beautiful. Here's our contact information. Chris, I did send you some product pages to kind of talk about the WOTC and the FICA. Fred has a link that's like what I'm going to suggest is one of the more current websites that can help with this.
So you want me to just hold on to those if somebody reaches out and wants the information?
Sure.
Okay. Well, guys, that was terrific. Thank you. Anything else you want to add? Are we good?
I think we're golden, Pony Boy.
Well, April and Fred, thank you so much.
Thank you very much, Chris.
No, thank you. And very up to date. I'm hoping I will send the link to this to the members that couldn't attend. And I hope you and everybody will attend our trade show on September 24th and 22nd. So thank you.
And thank you. I'd appreciate the opportunity to reconnect with you, Chris, and with you, David.
Yeah, absolutely, Fred. Likewise.